I'll be live shortly, about 5 to 7 minutes or so. Hey guys, I'm gonna get this started here pretty soon. Forgive my voice, I'm gonna say that right up front. I'm having a ton of trouble, especially lately in the Bitcoin in 60 seconds videos, as like allergies are hitting over 9,000 and whatnot. And yeah, it's not been fun to record those Bitcoin in 60 seconds videos because it's got to all be done in one take. So I do apologize about my voice ahead of time. I'm gonna have to back away from the microphone, cough a little bit here and there. But yeah, we'll get rolling here in a minute. Just drinking some coffee. Finishing up a little bit of lunch here. And then we'll jump into some macro analysis, and I'm going to be looking at the lower term time frame analysis as well. That'll kind of cover what I've been doing in the Twitter threads lately. So just hang in there for a second, about another minute or two here. Alright, let's turn this music down. And yeah, get this rolling. It would help if I actually click the right buttons. That'd be good. Alright. Let's close that down and get this show on the road here. Make sure the live screen is set up correctly. Hello and welcome to Macro Tuesdays here on Landy's Crypto Corner. I am Landy. I am going to be taking a look at the Bitcoin chart here on spot on some higher term time frames. Probably look at the index and other things as well. Going over some macro TA, and then I'm also going to do some low term time frame analysis and take a look at what the intraday is presenting in terms of setups. So let's jump into Bitcoin's monthly here. Now, the last macro stream that I did, I had noted that Bitcoin was trading around and above the basis band of the Bollinger Bands here on the monthly. Now, this is an interesting setup because typically when you close above the basis band, you like to see price run to the upper first standard deviation of the Bollinger Bands, and that is currently at the breakdown candle from this low over here at 38.5, and it's coming directly in line at 37.5. So Bitcoin's still got quite a bit of resistance to get through on the macro time frame between here and there. If it were to push up 31.8 at this breakdown candle from the Wyckoff reaccumulation low in 2021. Of course, there is the macro overhead resistance here at 35K. And then we've got that breakdown candle at 37.5 and then 38.5 directly above there. but it is an interesting setup, and it actually does give Bitcoin some room. If you've been watching the Bitcoin in 60 seconds videos, the main support that I've been calling out on any kind of a move down has been the 28,000 to 28,500, 600 area. And we can see that the monthly basis band is right there at 28.6. So that is something to note, and it is important. But I did want to call out something a little bit different. So we're going to not just look at Bollinger Bands today. I've been getting a lot of questions from DMs on Twitter and Discord and in other places, even emails on YouTube. So about my technical analysis methodology. And I am multidisciplinary, I guess you could say. There's not much about technical analysis that I can't answer questions about. My preferred methodology for trading is volatility analysis, as I am a volatility trader. I am a day trader, so I often open and close positions in a single 24-hour candle. That doesn't mean that I don't hold swing positions. I do, but I have really honed my system to be tailored to intraday trading, and I do hold longer term positions, but they often when you're holding multi-day or multi-week positions, often options are better, and there currently isn't a solution for that is viable in the United States, depending on where you live in the United States. But so yes, there is swing positions. In fact, I'm in a swing short still. It almost tagged me out the other day, but that position's been open since the last spike up to around 31.5 or so. And I've taken profit on it. Stops are flat, and they did almost get taken out the other day. But yes, there's not much that I can't help you with if you have questions. So feel free to ask. The one discipline in TA that I am, it's not that I'm not knowledgeable about, but that I do not often use, is wave analysis. And I do think that there are much better people to go to get information about how to do wave analysis, and that would be Elliott Waves. The guys over at Cheeky Crypto, Credible Crypto, there's many others as well. They do good wave analysis. I don't find it useful on lower term time frames, but in the macro, it can be very useful. There's even some of you that might be very good at it as well within the community here. So if there are people with questions about it, if you could help them, for those of you that do have that knowledge and do trade that way, I would suggest that you offer that up. That would be pretty cool. But outside of that, there's not much else that I cannot help you with. But we're going to take a look at moving averages here. So these moving averages, at least in the numbers, are going to be very familiar to those of you who are members or a part of the Crown's Crypto Cave community. If you're fairly new, you may not even know what Crown's Crypto Cave is, as I believe it's all Eric Crown crypto now. But yeah, if you're an OG of the cave, as he says, then you'll recognize this particular EMA setup, which is the 9/21/55/200. I often play around with this, having a 50 SMA, but I also include the 200 SMA. I don't currently have the 50 SMA on this chart, but I did want to address something that I've been seeing going around on the macro analysis, kind of the macro analysis hot takes here lately. And I've been seeing charts where people are pointing out that, well, hey, we have to be ready in the next couple of weeks for a 2020 style drop, like what we saw in March of 2020. And I just quickly threw on the moving averages here, and I am not seeing that setup. If anything, if you're going to look at 2020, and yes, I know what some of you are going to say, we're going to look at 19 in just a moment, but the urgency in which some of the people on crypto Twitter and crypto YouTube and other places are pointing out that this is just going to experience a massive dump off right from where price currently is, just doesn't sit well with me, because when you look at 2020, what I want to call out here is this purple moving average, which is the 200 simple moving average, and the white moving average, which is the 200 EMA. Now, I often use the EMAs and SMAs as a bit of an early indication of not direction, but kind of momentum. So in this case, we can see that the 200 EMA is underneath the SMA just prior to the move up. We get a deviation and then move right back down into that March sell-off. Whereas shortly thereafter, you can see that the 200 EMA in white is above the 200 SMA in purple here. Bitcoin pumps through, finds support on it, comes back to the 55, breaks this consolidation range to the upside, comes back and retests it around the 200 EMA, and then marches on to, well, have a nice massive bull run here. Now, when looking at this from the current time frame perspective here in 2023, we can see that Bitcoin's 200 SMA in purple is underneath the EMA. So this is what I would consider full trend. So we're above both the 200, 200s, the EMA and the SMA. And the 21 is above the 55 and 9 is above the 21. So we got a full stack basically. And that is, in my opinion, pointing towards momentum to the upside. Now, an early indication for me that momentum is running out to the upside would be more consolidation here and or a move up and a dump off. And then we proceed to see the 200 SMA get above the 200 EMA. It doesn't always mean that you're going to see daily mean reversion back there, but it is showing that the upside momentum is slowing significantly. And so far, things look fine. Now, what I would contend is this: if you're going to make any comparison, this is more like what we saw in 2018 into 2019. So we see that here in 2018 into 19, we had the 200 EMA underneath the 200 SMA. Bitcoin breaks out. It breaks out above the overhead resistance here of the consolidation, goes on a beautiful run to the upside. The 200 EMA gets above the 200 SMA, and then Bitcoin continues higher and higher after a little bit of consolidation here. Comes back down, tests beneath the 21 EMA, moves up, comes back to the 55, consolidates, dumps down underneath both the 200s, and then we see the 200 SMA sweep over the top of the 200 EMA, or you could say that the 200 EMA then sweeps under the 200 SMA here. We see the consolidation under both. We come up to the 200 SMA, find it as resistance, find the EMA as support, pop up above, turns into a deviation, price dumps off. So if you're going to make any comparisons, or if you see any comparisons, I would contend that the time frame in which you could compare it to would be the 18 into 19 lows to the pump up before the dump off. Now, the other contention would be that we are in the look that is being presented right now could be more akin to the fourth quarter of 2020, just prior to breaching the all-time high, where the set of EMAs were, well, in this case, the EMA and SMA rather, were in full stack mode, basically, the EMA above the SMA. And that's typically what you want to see for more powerful trending moves. I don't really have an opinion. I would say that this is more akin to, if you're going to make the comparison, it's more akin to the 18 into 19 time frame than not, in terms of the look on price, in terms of structure, and in terms of momentum and moving averages. So I hope that kind of clears up something that I had cryptically put into the Discord chat for some of you guys here, and that kind of provides a little bit of context for some of what I've talked about prior when it comes to the Bollinger Bands as well, to assess where we are in the macro scale of things. So when looking at the Bollinger Bands as well, on something like the monthly, we'll go over to the index. Yes, that's right. Doing a little bit of timescale analysis on the lower term time frames. So when looking at where things could pull back to on the monthly, should we see a 19 into 2020 style mean reversion on the daily, what I would be looking for is where are the major EMAs in relation to the standard deviations on the monthly. And I had already noted in the previous macro video that the lower first standard deviation is right around 19,500. If Bitcoin closes the monthly time frame underneath there, that is the only real indication to me that Bitcoin would be going down and heading towards that major low and testing it again. And of course, when testing it, that opens up the possibility that it could violate that low and make a lower low. That's not the first thing I'm looking for, especially being above the basis, above the 21, but we are still awaiting a 9/21 cross here. So, Bitcoin likes to backtest that 9. Of course, it is the fastest moving average that I'm using. And in this case, drawdown drawdown right back to this prior low, or a swing of this low, would be out of the ordinary given the setup that we just saw with this bullish engulfing monthly candle. But because it did not break and close above the actual wick high of this consolidation range on the lower term time frames at around $31,000, it got its close at 30,000 and just under 30,500, we'll call it. That still leaves the door open for for a drawdown to the 55, somewhere around the $24,500 area when looking at the monthly. Now, that's not the first thing I'm looking for, though. Obviously, there's a lot of support to get through to the downside. For it to even get there, it would have to breach around the 28.6 level at the basis. Right below there, we've got the 21 EMA, which I do want to see above the SMA. So the basis band is a 20 simple moving average. You want to see the 21 EMA above there, and then 9 above the 21, also above the basis. That would be the preferred setup to be looking for things to be headed up much, much further. Obviously these lag, so if Bitcoin has a monthly close that breaks out, I suspect we will see those crosses. But in this case, we have the 9 EMA on the monthly at 27.5, which is a daily support as well down there. And then that EMA coming in at right above the breakout area at that 24.5. So things still look good for upside to me. I know there's a lot of intention in the market that that things are going to move significantly lower. I'm not really sure, outside of some exhaustion on some medium-term timeframes below the weekly. I'm not really quite sure what people are looking at, but when looking at the daily here, we can see that the Bollinger Bands are telling us that a move, and a significantly sized move, is going to be occurring soon. And in this case, we have the upper second and third standard deviation and the lower second and third standard deviation within the trading range. And this leads to a lot of fake outs before the real move gets rolling. That's one of the reasons why I called out in my Bitcoin in 60 seconds video the other day, be aware of fake outs coming into the Monday open. And we saw quite a fake out to the upside of the range. The other thing to be aware of, so we saw this fake out to the upper second standard deviation on the daily at around 31K. The fake outs can happen within range. That's very typical before a larger, more volatile move on the daily. But you also have to be aware of fake outs that deviate the range. So to the upside here at 31.5, there is the overhead resistance of the monthly, even, as I struggle. And that is going to be at 31.8, that monthly area that I had just pointed out. I believe I have this marked. I do. And let's get rid of some of this. Yeah. Just a moment. All right. So just above price action here in the range, we have the monthly overhead resistance. That's that close open. And the reason why this is such a significant one is because it is a daily close, a weekly close, and a monthly close open. So this is, to me, a very significant area at 31.8. You don't want to see expansion up that takes out the high and then rejects 31.8. That would be a deviation of the range on expanding volatility. And if it were to come back in the range and especially start closing back below the upper first and the basis band of the Bollinger Bands, it's likely to run right back to the bottom side. When you see initial expansion of Bollinger Bands, you see that expansion of the standard deviations start to spread out in both directions. I'll show you an example of that in just a moment. But it would be 31.8. That's 31.8. You can call it 31.8 to 32.4. You don't want to see deviations of that area and then price come back into this range. You want to see it break through that area, hold support, and then run to get a nice expansive move to the upside. You know, there's 33K is some medium-term resistance up there just off the top of my head. And then, of course, there's the 35K monthly. To the downside, you can see just below the lower third standard deviation, we have that daily support area at 29.5. So you don't want to see deviations to the downside of the range that take out that 29.4 wick low and then bounce somewhere in the mid zone down here. There's some lower term time frame supports. There's also there's some close opens down here as well at around 29K. There's some 12-hour close opens there. I believe there's some 4-hour highs in that area. That would be 29 or so that then bounce and reclaim the range wick low, and especially the close open lows down here at, what is this open at? That is just under $30,000 at 29.9. So that can often happen, along with what we just saw intraday with the fake out to the upside, and then the aggressive sell-off from the upper second standard deviation. It's a non-zero chance that we would see a fake out to the upside or downside that deviates the range as well. And I want to call this out too, because the 2-day is presenting an interesting setup. This is going to be an if case, but you can see that the Bollinger Band set on the 2-day is pretty spread out here. So we have a wide set standard deviations of the Bollinger Bands here. And that does mean that when taken in the context of the daily, which is compressed, if we were to see downside expansion from the look of the 2-day, that would be mean reversion. So downside expansion on the 2-day would be, downside expansion on the daily would be mean reversion on the 2-day. And one of the main areas that I would be watching would be in and around the basis band. And that just happens to be at 28.6. That's also the basis band of the monthly. So this is a big area. It's also, a daily high area. And that would be a big area of interest for myself. There's a daily high area, daily high here at 28K. There's a weekly support as well. So this is, and just to show you the weekly support, when you look at a swing indicator of any kind, you'll note that we had this little weekly downtrend. So we have the low to a high, and the close open there is just above 28K, and the high that was put in there was at that 28.5 region. And then, of course, there is another weekly low down here at around 26K, with the actual wick low coming in at that 24,750. And I believe that was where the monthly 55 is coming in. So everything's kind of lining up in these major areas. So if we did see downside expansion of the Bollinger Bands on the daily, I would flip over to the 2-day chart and just make note of where the major areas of support line up with the Bollinger Bands. And in this case, that basis band is lining up pretty darn well with some major moving averages, as well as technical support and resistance on the daily, weekly, monthly area. And then we have the lower first standard deviation coming in at 26.5. That would kind of be I wouldn't want to see price run there if we did see a downside expansion, but if price bounced there, that would be a pretty deep expansion to the downside on the daily. And that's the area that I would be looking for on the daily 2-day. At the lower first of the 2-day, if the daily was to expand down into that area, I'd be looking for it to run out of momentum around there and then see, evaluate where it bounces to from there, especially if it were to regain the basis to the upper first area, which of course would be right back into resistance and then a recovery of that resistance. So I hope that that makes sense, at least the potential for a downside move. And then, of course, the potential for an upside move is already there as we are hanging out on the highs and consolidating directly underneath major overhead resistance. So let's go ahead and turn some of this stuff off for a moment. And let's go ahead and turn on support and resistance again. So that'll be a little bit cleaner without the the Bollinger Bands on here as well. So we've got the daily breakout level that I've been called out for a long time. It's just still have it a leftover label there. And that was the 28.6 level and the 28K daily and weekly support area. And a retest of that would make sense, but we are retesting in and around a high side structure already and consolidating above it. So if price did move up in this case, $31,050, which was this wick high over here. That's what we spiked the other day. And closures above there, I suspect we'll go test the actual close open high again, give that a swing at around 31,160, then the actual wick highs, and then test that overhead resistance at 31.8. And a breakout above 31.8 and then 32.4 up here likely leads to a move towards 30,500 as long as this area does not become a swing fail zone where it pops up above and then comes right back down. So that's going to be what I'm watching for over the next few days here, especially as we come into tomorrow's economic data, as there is CPI tomorrow. Then we have PPI, and then the consumer buying power report, I believe. Yeah, consumer sentiment report. So it's going to be interesting. I do think that we are nearing range resolution sometime this week. So keep that in mind. That's my personal take on it. If it does just consolidate this week, especially in this area, and it keeps bouncing off the lows here without breaking down, I'd be more biased to the upside, to be quite honest. And I will give you the reason why right here. We can see that a regular Stoke indicator, which is your close over close momentum, is projected, if Bitcoin closes here or higher today, to get an initial cross up right at the edge of the bearish control zone. And that's a pretty good area to see a bounce in. And that Stoke RSI, which is your velocity of RSI, is turned up and starting to head out of the oversold zone here on the daily. So we can actually get the pivot for this. Again, I'm going to say this every time, so bear with me. I do not get paid, and I'm not an affiliate, so I don't make any money for pointing out this indicator's special features. It is a paid indicator by KVDB over at app.crowntrading.net, and this has a cool feature in it where it can give you the actual momentum pivot for the regular Stoke. And in this case, it's at 30,113, which is an area that Bitcoin recently opened at. Yeah, that 30,168. So back below this open, and I would say this close down here, which is at 30,168. So this close open structure right here, that would be that projection to the upside for that momentum shift on Stoke would be nullified on any closures back below there. And I assume it's probably going to move up and or down. I think on the first cross it should move down, so it might move down to somewhere around the wick. I would still say anything below 30K on a daily close would keep the Stoke momentum indicator to the downside. And that because it is close over close momentum, it was pointed down. The closes got higher. That's why it's starting to shift. It does lag. It is running a 6.3, so you can replicate it. So it's running a 6.3, 14, 255 look back. You just won't get the momentum pivot. But the momentum pivot is fairly easy to see if you're looking at the closes. You understand how Stoke works, that it is close over close momentum. Then, we just go close below the last close open low, then you're likely going to see it head down. If it doesn't already get a cross up, then it's going to continue down. If it does get a cross up, then it would just be an initial cross that would not complete where the K and the D read point to the upside. And what I mean by that is this is projecting right now an initial cross to the upside if Bitcoin closes here or higher, whereas that's not a complete signal unless we see both the K, which is white, and the purple, which is the D read, both pointed to the upside. That would be your complete signal on a Stoke momentum indicator. Now the Stoke RSI obviously got that signal quite a bit earlier. That's running a regular 3.3 settings, I believe. Now when looking at a regular RSI, a little bit of a double bottom here between this last low and the most recent low, if it can be set. Where would that be set? Well, that would be set basically on closes here or higher as well. So any close higher than the last close would set that as a low. I would want to see the high taken out though, so that it does not become a low into a swing fail or a failure to break the actual wick high here at 3150. So keep that in mind. It would technically be a low set from this low, a little bit of a a high structure built here and then another low to the high. This would be your consolidation low. Basically, you can take it as one structure. You can take it as two. It just depends on how you read candles. And this low would technically confirm that area. And that would be a confirmation on bullish divergence, I believe. This low came in at, that was 29,899 with the open at 29,895. And this is not really a structural low, so we'd have to look back a little bit further for a bull div. And, maybe you could make the argument that there isn't one here. You could. Now, the argument on the other side of that is if you read the current low right here with that low wick as the low, then there would be bullish divergence off of this low back here. So the within range low that closed just above around 30,100. So that is my take on the longer term time frames. Might want to go check on weekly momentum here. Get rid of some of these arrows. So close over close momentum looks good and healthy and pointed to the upside. Got a bounce within the bullish control zone. Stochc RSI initially sideways towards towards the D read, right at the edge of the bullish control zone. So, you have a little bit of conflicting momentum signals, but again, Stochc is price action momentum, close over close, and Stochc RSI is, just the velocity of the RSI. And in this case, we did see that bullish divergence. We had the little meme head and shoulders pattern on RSI here and on price action. Got the throwback. Typically, you want to see it back to the same level or the head. And in this case, that's around 69. Nice. It's above the signal line. It's in and around the bullish control zone of RSI. I'm not seeing anything concerning just yet. So now we'll see where this weekly closes. This does look to me like a bit of a consolidation bull flag, if it wants to play out like that, or bull pennant, depending on how you're going to read those wicks. You could draw any meme pattern you want. In my opinion, I don't think it's worth it. Just look at Bollinger Bands. It's going to tell you everything you need to know about upcoming volatility. And in this case, when we look at the weekly bull bands, I believe I'm going to go on a limb here and say that we've lost the upper first, or we're above the upper first. We're above the upper first. So we did lose it in the early goings of the week. We tested it last week and we wicked off of it, and we've tested it again and pulled away from it. And that is at $30,088 currently. The upper second standard deviation on the weekly is going to be around 32,385, and that is daily overhead resistance. That's that 31.8 to 32.4 region that I've talked about a lot. And that is where I'm being very specific and very particular about calling out to be on the lookout for not just fake outs within the range before the move gets rolling, but deviation fake outs from the current range on daily expansion. Right? This is where the upper second standard deviation on the weekly sitting right in a major resistance area, just above that 31.8 to 32.4. That is where, as I just pointed out, I want to stress this again. That's where I'd be looking for potential deviations outside of this range. Now, a deviation outside of the range, by the way, we get expansion on closes above the upper second or below the lower second standard deviations of the Bollinger Bands. So say we get expansion, we test 31.5, we close above that and start running into 31.8 to 32.4, right? That 32.4 is right where the upper second standard deviation on the weekly is. It could swing that area, and if it fails and gets a bearish reclaim of this consolidation structure, then it's right back into range. Volatility will either run the other way, right? Because bands will be expanded, so it would give price the ability to move the other way even very quickly. But that doesn't necessarily mean that things, the market's going to crash and everything's going to zero and whatnot. But likely that would be your fake out. That would be your range deviation fake out to the upside. So just be aware of that. Now, close over close, with the way that the weekly Bollinger Bands are expanding, that upper second standard deviation is going to keep creeping higher the longer that Bitcoin is above the upper first standard deviation. So, if we did get a swing fail of this area, comes back into range and does not break down, then we look for, the potential for the ceiling to basically get raised, like the next week. And the same goes for the downside. That's where, there's so many supports underneath price action, weekly, monthlies, dailies, and a lot of appetite even to the downside of this current range, that if price did deviate to the downside, that's where you then look for whatever. We're looking for quick reclaims to call it a deviation of the range or a fake out deviation. But that's where, goes and it spikes into, $28,500, $28,000 and immediately pops right back up into range, reclaims the wick low, reclaims the close open structure low, and then proceeds to either range or run it the other way. And we've seen this a few times. So, we saw this was an extended drawdown right back to support here into some major areas. Many of you who have been watching the Bitcoin in 60 seconds know that I was calling this out for the longest time to come back and retest, around that mid to low $24,000 area. And it did, after, painting a bit of a meme head and shoulders pattern, or a tilted head and shoulders, depending on what kind of pattern you want to choose, what kind of pattern it wants to identify as today. And then we had the drawdown there, and then the reversal. Now, the real big fake outs tend to happen, like we had the consolidation before a move up into overhead resistance on the longer term time frames at the time. And then what did it do? It gave it room to run it right back the other way. This was a deviation of the highs over here. Yes, it went quite a bit higher. Yes, it was very tradable. But if you were like a long-term spot breakout swing position holder, you got screwed a couple days later when it just pinned out the upper second standard deviation here after the initial expansion, and then ran right back below and almost to that second standard deviation, and then lower high'd its way down to actually take out the lows, try to remain in the range, and then comes down and tests the support over here on the left side of the chart. That's kind of what I'm talking about. Especially when looking at and evaluating the weekly there. So it's something just to be very aware of, because it can happen to both sides. We have an example of a nice pinch on the Bollinger Bands back here in February. We got a very quick move to the downside, deviating the bottom side of the range for a couple days, pinned out on the lower second, and then ran it right back to the top side. So we had a deviation above this consolidate or below this consolidation, and then it ran right back to the upper seconds and deviated the top side, came back into range, consolidated, and then broke down for that nice move to the downside, that nice little liquidity grab over here on the structure in the under $20,000, but basically this consolidation structure with before the pump up to that 22.8, I believe this was. Yes, it was. And then the low side here was at 20,000 or so. Yep, 20,000. And you can see there was no daily closures underneath that. So nice liquidity grab right into those highs, right into that low, and right at the lower second and third standard deviations. And it wasn't coming off of the really tight expansion. It was coming off of Bollinger Band expansion to the upside, and then mean reversion right back to the bottom side, pin out, reverse, grabbed onto that lower second, lower first, close, basis and upper first close, pin out at the upper second, and then get expansion to the upside to where we're currently hanging out, or we're hanging out rather for quite a long time. and then we had the lower side reversal. Now we're just consolidating. So I don't know if that kind of me walking through some of those expansions and contractions helps or hurts there in terms of your understanding. So I'll look over at chat here and defer to you guys. Let's see. So I'm going to take a moment just to read the chat. Yes, I'm alive. How did Bollinger Band signal or confirm a volatility expansion? Closures above the upper first or lower first, you'll begin to see expansion. Aggressive expansion begins above or below the second standard deviation. So above the upper second, you'll see volatility expand. Below the lower second, you'll see volatility expand quite aggressively. So volatility expansion is the expansion away from the basis, and the basis is a 20 simple. And if we start to see Bitcoin trade away from it to the upper first standard deviation, you'll see this number BBWP begin to increase. You'll also see it increase if Bitcoin trades from the basis band to the lower first standard deviation. You'll see a slight increase in the Bollinger Bands. It's direction neutral. It's just showing you that it is that price is expanding away from the basis band, which is used to measure the standard deviation. So the first standard deviation, second standard deviations, and third standard deviations away from the basis, not away from price action. So you can use an ATR if you want to do standard deviations away from price action. You can also just make indicators, and I can even build one in that is literally just standard deviations away from price action, but you want to average it out somehow. So the basis and Bollinger Band sets and the 20 SMA are, in my opinion, the best way to do so. You can use VWAPs. VWAPs are really good too. And they often work in much the same way. They'll find that they're often in the same areas. But when it comes to volatility metrics, the BBWP calculation is tuned to the actual Bollinger Bands calculation. So that's why I think that using a good set of Bollinger Bands, you can use mine. They're free. Just link in the description or on my Twitter profile, you can find the link to this. But I think it's the best way to gauge volatility metrics. Now, below the lower second standard deviation and above the upper second standard deviations, the second standard deviations of Bollinger Bands are going to be one of two things. They are either going to be a reversal area or a continuation area. And for reversals and continuation, you need to know where support and resistance are. So in conjunction with resistance, obviously, this first pass was a reversal, right? No, we didn't see a daily reversal, but the upper second standard deviation on the daily provided for a lower term time frame reversal. It's right around resistance. So it's either going to be a reversal area or a continuation. So if price starts to close above it, you'll see aggressive expansion of BBWP or the Bollinger Bands in this case to the upside. You'll also see them expand to the downside as its standard deviations of price away from the basis band. So I can always give you the math, by the way. It's in spreadsheet form. I don't think it's worth it. You don't need to know it. We have an indicator for it. But what that would indicate is closures above would indicate continuation at least to the next area of resistance. In this case, that would be the highs at 31.5 and then that overhead resistance at the monthly at 31.8 to 32.4. So that would be your continuation look. You would see an increase in BBWP. Of course, you're up over a major moving average, that being the 20 simple, and your two standard deviations or the second standard deviation away or more if you're closing above it, indicating that continuation. Same goes to the downside. So closures below the lower second that take out this low would get expansion down to, at minimum, for a target for me would be 29.5. Any closures below there, you're going to see continued expansion to the downside, aggressive volatility uptick, right? Because it's a big move. That's also breaking resistance, and that's where you get your that's basically how you read Bollinger Bands. Now, the reason why I have the third standard deviation on here is because the second and third standard deviations are kind of a zone. It's what I call your continuation / reversal zone, and you take it close over close. A good example of that is the daily upside expansion here, coming off of the lows here. We did see expansion to the downside over here of the Bollinger Band set to the downside. Now the expansion down widened the set of Bollinger Bands, and it did provide for next day continuation to the wick low. It bounced off and then hit around the basis band. We saw another closure slightly below the lower second, and this time it acted as a continuation in the lower term time frame, swung the low, closed above. Now it's a reversal. You can see reversal over here, comes back to the basis. We get the nice close above. We get aggressive expansion, and because this close above came right in and around this overhead resistance area, right? As soon as price passed that resistance area in the lower term time frames, you know that it's going to head up above that. It's going to get continuation, right? So above this, what is that, 28.5, right? We know that that's a major area, and you can just look left. There's all the resistance over here. Once it clears that resistance in the lower term time frames, then you're looking to the next area of resistance as the continuation targets. So, you got your 29.2 to 29.5 areas over here, and then $30,000. It took all of those areas on the continuation of expansion on the daily. We see that it tried to test in there a little bit more. It tried again, closed below this wick low. That starts to become a swing fail. It comes back down then and starts its cool down back to, or mean reversion back to the first standard and then basis. And in this case, the mean reversion was not that price moved back to the basis, it's that the basis caught up to the consolidation. So that was your cool down in volatility, thus causing the Bollinger Bands to start to pinch. And you'll note that when we first get expansion, you're going to see this again soon. So when we first get expansion of Bollinger Bands, they expand in both directions, equidistant from each other. So it will be more bias to the downside once you're getting consistent expansion. So you can see the bands are expanding, but less so to the upside and more so to the downside. Why? Because we're below the basis band. So the basis band's direction or angle to the upside or downside, or slope, if you like, does matter. In this case, it's to the upside. So when we saw this expansion, we saw aggressive expansion to the upside and downside, and then it starts to curl the lower standard deviations, close over close, day after day, of the basis band moving up towards the consolidation. You see that we're getting that residual expansion of the bands up over price action as it catches up, and then you see the curl up. And this is actually one of my favorites for, we get a rejection, we come back down. If we find support and the basis is pointed up, lower first, lower second, lower third are pointed up, I like to take those as reversal areas to the upside. And then once bands catch up, they more aggressively catch up to the bottom side, and they kind of swoop over the top. You see the same, just invert your chart, and that's what it would look like if it was bearish. So I hope that explains the Bollinger Band volatility and expansions. I mean, the BBWP metric here is the volatility of the Bollinger Bands, which is the percentage of expansion, basically. And in this case, if we do get expansion to the upside, and BBWP, let's say we do get expansion to the upside, it rejects off, let's call it 31.8, 32.4. If we do see expansion to the upside and Bitcoin is expanded, right? It's above the upper second standard deviation. It's hitting resistance. It looks like a reversal, but the BBWP on any reversal remains above the moving average and the basis band is sloped to the upside. More than likely, that's a good mean reversion play on the lower term timeframes for a bounce. So it's mean reverting. You buy the bounce and you wait, either it's going to run past the most recent highs or it's going to stall out at them. Same goes for the downside. If it gets expansion to the downside, you're going to see BBWP volatility pick up. If it's still above the moving average on any kind of a downside move that bounces up, you evaluate. It's usually a good short play that then can, it's either going to go back and test the most recent downside move lows, or it's going to make new lower lows in many cases. That's not like the rule, but that's something that I've found and is going to be quantifiable in the indicator here pretty soon. So just got to figure out the actual strategy settings for it so that it will accurately kind of call out those potential moves. All right, so I hope that answered that question. Let's see. Oh, and somebody actually answered that question very well right there. Just below your question. I guess I should have read, huh? But that'll help other people who maybe didn't know that you had that question that watched this. Still gives you a sense of direction. Yes, it does. I mean, close over, close momentum, you can either do yourself or use a Stoke. The previous contractions can move between 10 and 20% up and down. Yep, support and resistance. Yes. So the four biggest keys to trading. The first thing is trend. Then you need to know where support and resistance are, and volatility, because trend, support and resistance, and volatility define your momentum. So all of these fancy momentum indicators, which I have a ton of them, this is all momentum. There's a mixture of paid and free indicators. There's MACDs. There's all kinds of volume indicators. There's money flow indicators. All of those are momentum-based indicators. Some of them are fundamental, but TradingView can't differentiate on a lot of the money flow stuff. So it's kind of hokey to me, but there are some fairly accurate money flow indicators that you could use, but a lot of it is momentum, right? So momentum is always going to be defined by trend, support and resistance, and volatility. That's what defines your momentum. Often what many people do a lot of people that first get into trading, or even experienced guys in trading, they divert to a lot of overlapping momentum indicators and signals. And if you just understand structure, market structure, where you understand that trend, support and resistance, and volatility define that momentum, you don't really, a lot of it's redundant and or unneeded and or can give false signals because of if you don't understand exactly how that indicator is tuned to read momentum, or if it's a momentum and volatility indicator built into one. I often don't think that those are the best. I do think that they should be separated, although I'm open to always looking at at ones that you guys bring up. But in my opinion, a good set of Bollinger Bands, BBWP by Caretaker, or the one built into the Landy Bands here, is going to be your best bet. You can use BBWP with other indicators as well. You don't just have to use it with Bollinger Bands, but I think that if you understand how Bollinger Bands work, where expansion and contraction begins, where the main reversal areas are, and continuation areas are, it helps you understand when volatility gets rolling. It helps you understand direction much better, and it helps time reversals and continuations. So that's I think it's one of the most powerful ways of trading, especially if you're trading consolidation, contractions, right, into expansions. Yes, on lower term timeframes, it can run the bands, both top and bottom side, but typically there's really good trades to be had in between those, and then you take the reversal trades off the upper second and third, lower second and thirds. Really low term timeframes can be dicey though with bands. That's where just turn all the indicators off and learn how to trade candlesticks. Bollinger Band strategy is one of the very few I haven't studied. I do it a bit different. So what I would suggest is you go over to first off, go to Twitter and go and sub or follow rather B-Bands, which is John Bullinger. That's this gentleman here. And in here, he's got his main site. Go to BullingerBands.com because you need to have a good, and I'm going to have a series training people or training you guys on Bollinger Bands basically and Bollinger Band theory from my experience. But you can go here to his website, and he's got a bunch of videos and articles where he explains under the Bollinger Band section, where he explains how to use Bollinger Bands. And he explains, he uses Bollinger Bands, right? So it's your 20 SMA with the second standard, 2 standard deviations away from the SMA. He explains the upper second, lower second, or the upper bands or lower bands as being reversal zones and continuation areas. But he also uses what's called Bollinger Band percent and Bollinger Band width. So Bollinger Band percent is kind of where you are on the bands, 0 to 100 being the lower band to the upper band, and then the width of the bands in terms of the calculation that he does there. So you understand how wide the bands are. I prefer BBWP. It's an advancement of the Bollinger Band width and percentage to define the direction, basically, or not the direction, but the expansion criteria. And if you just read Caretaker's reason for creating this, is Bollinger Band width percent is derived from the Bollinger Band width indicator. It shows the percentage bars over a specified look-back period that the Bollinger Band width was less than the current Bollinger Band width. So it tells you basically what it was looking for. So the broad concept is he's basically saying that Bollinger Bands is a volatility indicator. It consists of 3 lines, and it tells you basically what Bollinger Bands are. And then his idea for why he created this, along with his proposed concepts and knowledge based on this and how to read it and use cases and all kinds of examples. Now, Caretaker also, he gave me permission to use his calculation in my indicator. And this particular volatility metric leveled up my game. Now, I have another indicator that shows you Bollinger Band width and percentage individually, but the BBWP, having it baked into one indicator where you just look at it and you say, yes, expansion is kicking off. It's either very volatile or it's very contracted, meaning that there's a move coming, or it's very volatile. So look for reversals, look for mean reversion plays, look for, if you want to take counter trend trades, that kind of stuff. But I'm trying to look for, here I present the Bollinger Band width percentile as a refinement of the BBWP to somewhat overcome the limitations cited above, which he kind of goes through some of the limitations in this broad concept paragraph. I suggest that you have this indicator on your chart, whether you are using bands or not, because it is, like I said earlier, it is worth looking at. But if you're going to get invested into understanding how Bollinger Bands work, you should learn it from the guy who created it. And then you add on cool, fancy stuff like the BBWP, which are a refinement of the volatility metric, or can be used as a refinement to the volatility metric of the bands. And then you pay attention to nobodies like me who can teach you how to use triple set Bollinger Bands and more advanced strategies and techniques that can help you trade, hopefully. Obviously not financial advice. I'm just teaching you about indicators and how to look at markets, right? All right. So, yes. And again, there's other stuff built into this indicator, including something that should be built in there pretty soon. This is credit to JRTA. He is a member of the community and an awesome, all-around awesome guy and developer who has created an indicator that's going to be integrated into the Landy bands here soon. But this indicator is a customizable multi-time frame Bollinger Band set in levels. So basically, it's a long way of saying that this is the 4-hour Bollinger Bands. What it's currently set at is the 4-hour time period. So this is a representation of the 4-hour Bollinger Bands as levels so that you can see it when you're looking at other charts. So for instance, you can see that the 4-hour Bollinger Bands here are pretty much in line between the upper second and lower second standard deviation. So the lower third standard deviation is slightly below the daily lower second. That does mean that if Bitcoin starts to close below the lower second standard deviation of the Bollinger Bands on the 4-hour, it would get expansion down into somewhere around that daily lower second standard deviation at just under 29K, around this low at 29.9. That would also indicate that if the 4-hour starts to expand aggressively to the downside, it's likely that we could see the daily start, getting to the point where it could close in that area, thus begetting Bollinger Band expansion to the downside. And if the 4 hours breaking down from this low, then it's likely that it continues down to around 29.4, 29.5 area, and we evaluate from there. That's around the lower third standard deviation on the daily here. To the upside, the upper second standard deviation is at 30,734 on the 4-hour. And if it starts to close above there, that would be above the upper first standard deviation on the daily here at 30,737, so about $5 higher, and closes above there on the daily, would indicate that we're probably going to go up and test the upper second again around 31K. That would indicate any closures above there on the lower term timeframes like the 4-hour, closing above the upper second, getting continuation. And that continuation would then be most likely past this local 4-hour high up here. Then that would get expansion up further to somewhere around that upper second standard deviation and maybe even the upper third, still within range though of the actual overhead resistance here. So things might take a little while. So realistically, the 4-hour, you just want to see it green candle its way up, start really digging into those highs up here, and then mean revert quickly back to the basis lower first on upside moves. So the 4-hour is currently trading above the basis, just below the upper first, and you want to see it start closing above there in the upper second, get nice expansion, then come back down, hold the basis to upper first to maintain trend to the upside, and at worst you want to see it come down and just kind of settle in on that lower first and then reverse, regain the basis upper first, second, and expand again. To the downside, you just want to see the opposite. Now, that is super cool, and I'm so happy that he was like, I really wish I knew where the bands were when I'm looking at such and such time frame, like the 15-minute. Where are the 4-hour bands? Where are the hourly bands? So I mean, like the 15-minute is playing, the 15-minute bands are playing in between the basis of the 4-hour and the upper second. So expansion on the 15-minute would be above the upper first, where the basis of the 15-minute is. So if you start getting expansion above the upper second, that's a break of the local structure. So we'd see expansion up into around the upper second standard deviation of the 4-hour. Start getting expansion above there. Now you've got the 15-minute and the 4-hour expanding and the time frames in between. Pretty cool. Pretty cool. Yeah, and the Landy bands are in the description. So they're going to be updated soon, hopefully to incorporate this indicator and some other refinements as well. Hopefully some UI refinements. We're going to try and get rid of this style tab and move all that stuff over into selectable user input options on the main pane and just organize things a little bit better here. And pretty soon there's going to be a strategy built in. That should be pretty cool. Do that. It's a game changer if applied correctly. I think you're referring, well, you guys are running behind my behind for me, so you're delayed. I'm assuming you're talking about the Bollinger Band levels from the different time frames. which yes, it is a game changer. It allows you to look at it all on one page or one time frame instead of having to flip back and forth between the time frames and mark where the upper, second, and third were, or try to remember it, or the basis or something like that. 15 minutes, rejecting the bullish control zone of momentum, as long as it holds up in this range. Otherwise, it's going to come down and test the basis at around 30,300 rather to 30,360, which is a weekly level. So, referring to my bands. Oh, yeah. Yeah, and then a game changer that's, just one level deeper of complexity, but in terms of strategy, adding this into the indicator, which it should be there soon, hopefully, and then I think that would be helpful for a lot of people. All right, any questions before I start to wrap up here? Nice expansion to the upside, holding the basis on the 4-hour. Let's look at 4-hour momentum. It's pointed up and will cross up at close today on any closures above 30,460. It will get another cross up to the upside here. Kind of getting a little bit of a momentum pennant pattern. And you can, it's not advised typically, but you can get some meme patterns out of this. So if you want to do some trend line meme trend lines, because it is close over close momentum. If it starts to break this trend line to the downside, you're likely going to see this come back and hit the lower first to lower second area around 30,200 to 30K. Yes, Elliott Wave and Wyckoff. I'm well versed in them. I just don't trade using Elliott Wave. I don't use it in my daily theory, but there's a lot of good guys that I defer to for Elliott Wave. Jim of all trades. I'll have to check him out. Wyckoff theory is also something that some of you might remember. I called out the Wyckoff accumulation. Some of you met me at the breakdown from the all-time high the first time because I and a few others were calling for that breakdown. And then when you joined, that was in and around, it's either here. No, I'm sorry. It was here. And I was calling for the breakdown on any kind of a lower low than this guy here. And that was at like the same basic area both times, like that 53.8 on the second time. And it was like 53.4 the first time or something. And that was basically the breakdown from here. I was calling for a massive drawdown. And then when this started to get a Wyckoff accumulation, this was clearly turning out to be a Wyckoff accumulation. Hold on one second. I have my son's acting up right now. I can hear him. Hold on one second. Oh, he's being a little shithead. Yeah, so gotta love it. He definitely takes after me. He is he's giving hell right now. All right, but yeah, Wyckoff accumulation, hit the spring and go. And then we had our top back here, and then that 53.8 area, man, pretty clear when that failed. That it was around 53.8, this low. I was like, hey, this fails, it's done, it's over. That was based on momentum on the monthly and quarterly and stuff like that. So now we're on the opposite side of that. Any requests before I head out? Take a little sip of coffee here and let you guys catch up. Oh, really? So this is not from this chat, but this is actually a good friend of mine. And they have hit me up through a different chat. They're watching the stream. And they said, hey, turn those EMAs back on the daily. Okay. Let's do that. Here's your EMAs on the daily. Okay. And I've got some other. Did I miss the big show? You'll be able to watch it after. I've covered quite a bit. It's about, macro time frame, stuff like that. Yeah, once you're well-versed in accumulation distribution, they're pretty easy. Yeah, and there's many different ways of evaluating accumulation distribution. I prefer the volatility metrics myself, and because that's, trend, volatility, momentum. You can see when it starts to shift. Yeah, Baba, you're gonna have to go back and watch it. They refer to it as DVR on here, I believe. So I have the DVR function enabled, so you can even scrub back while I'm still streaming, and then also it's gonna be archived. So just so you guys know, the live streams I do unlist, so they don't show up on the channel. They'll show up like if you were to go to my channel, or they'll show up in your feed. But I unlist them after a while because they interfere with the YouTube algorithms pushing my other videos when I do upload those, because of when they shift from being a live stream into the actual algo. So then it like steps on any other video. So I do unlist them. If you have the link to them, you can often just go to my Twitter page, and I'll have it. The link will still be live, and I will relist them later once they're kind of out of that time frame where they'll step on some other videos in the algo. Yeah. So it doesn't look like I have any questions today. Was there anything that anybody wanted me to look at really quick before I head out of here? My cold coffee got warm. Well, I'm going to take it upon myself and actually look at one thing, and that's going to be Bitcoin dominance real quick. I still haven't heard from you, buddy. I don't know if you're still catching up, but why'd you want me to look at the EMAs? Ordinals. Okay. I will look at Ordi, sir. Give me just 1 second. Yes, it's still trending above the 9. Oh, you weren't here earlier. Yeah, I looked at EMAs. So that's actually in the very beginning of the stream. I went over some EMA stuff. I know exactly why you wanted me to bring that up. Yes, I already did. I already looked at all that. So Bitcoin dominance, it's a strong trend on the daily. I would say that it's going to head up some more. It is in a consolidation, much like Bitcoin itself here, and it is looking as though it wants to set up for a breakout, either to the upside or the downside. And I can tell you right now, whether Bitcoin's price goes up or down, dominance is most likely going to head up. Let's get rid of the moving averages here in the Landy Bands indicator. And yeah, tight 4-hour consolidation on the Bollinger Bands within the upper and lower first standard deviations on the daily here for Bitcoin dominance. Close over close momentum is pointed to the upside. Just like Bitcoin's price, could potentially see Bitcoin's price bounce off the bearish control zone. Bitcoin dominance is right around there as well. So, I mean, this really does look like alts are probably going to get smashed down a little bit further. You'll have some, they'll run if Bitcoin runs, but in relation to the Bitcoin pairing, Bitcoin's dominance is going to continue to rise. From the looks of it here on the daily, I could be wrong, right? It could fail, could hit the top side here at like 52% and then fall. But anytime Bitcoin's getting set up for a big move, Bitcoin dominance goes with it, whether it's an upside move or a downside move. So, there's going to be alts that follow, some alts that beat. That's pretty rare. But it's Bitcoin season, baby. I appreciate that, sir. Says, I will certainly tune in more often to your channel. I like your style. I appreciate that. I like your style. Comments are always greasing the wheel. Comments, flattery, always works with me. Let's see. Ordinals on Gate.io. So let's go ahead and take a look at ordinals. You want the tether pair, right? I think that's all there is over here. Yeah. So I actually picked some of this up spot recently. It's looking good on that 4-hour breakout. So I do suspect it's going to head up to around that upper second standard deviation on the daily. I see the potential for bullish divergence here. Yep. So there's bullish divergence. It's above the moving average. It's probably going to head up to the bullish control zone or somewhere around there. And that's around $9. That would be getting expansion on the daily. There is a high, closing high in there. Was it tested? 860 was tested. So above 860, it's probably going to go test 9. It's looking like it's getting close to this daily here as well. So 808, 860, and then I'd watch it around this lower high area at 9 to 935. So got some zones for you to pay attention to. Above 815, we're looking at daily expansion to the upside, targeting 860 to $9 at first. So this local wick high to the close open here, and then the next big area is going to be 935. Above there, it's already gotten above this low, so you don't want to see it drop this low again at around where it wicked out actually the other day at 755. So you want to see it hold 755 on daily closes, test in and around that $8. I'd watch that upper second standard deviation around 815. If you do see closures above there, likely see this run the local high again at 860, and then above there, pay attention to 9 to 935, and then we've got $10 to around 1044. Not really relevant right now unless it just green candles its way right through all of this and gets really aggressive expansion. We're already seeing the etchings of expansion, confirmation. Stoke is turned up. Everything's looking pretty darn good if you were to ask me. Yeah. So the etchings of expansion are here. Probably by close today, you see the moving average move up with BBWP. And because it's so new as a listing, I can't really trust some of the volatility metrics, some of the momentum metrics, but I would say because of where volatility is lining up with support and resistance, that this is a fairly decent play if it starts to break out to the upside, but caution below 750. You could give it some room down to that wick low. I wouldn't. Caution below 750. You can maybe give it back to the basis on the daily, $7, but you want to see it bounce almost immediately. How was that? Is that what you wanted to know? I can give you the bearish scenario too, if you want. 10-second chart this thing for a second here while I wait for you guys to catch up. I've got some If you guys that are chatting with me outside of YouTube, go ahead and repost in YouTube if you can. Oh, you're not logged in. Okay, that makes sense. If you're not logged in, you can't chat. On Ordinal's marketplace, there's no listings below 960. You know the bear scenario. Yeah. I think I know who you are. You'll have to confirm with me in Discord. And for those of you that are... Just wanted to compare the analysis. Yeah, I think I know who you are. No, Bitcoin's trying for the upside here on the 10-second chart. Look at that go. Let's see. For those that have asked me about Discord that are not in the Discord that I have is not any kind of like special private signal group or anything like that. It's not even a private group. It's just a group of me and my friends. I will open a Discord when the community is big enough. Right now, I can kind of answer questions individually, either on Twitter. There's people in the Twitter community as well. And then there's, the Discord is just a small group of friends that I know. I don't have any publicly available Discords, and I won't have any paid Discord. When I do open a Discord, which should be soon for the public, it's going to be free. Just come in and hang out. I don't have any Telegram accounts, so you're not going to find me on Telegram. I typically will not message you or DM you on Twitter unless you reach out to me. So all that good stuff. And here on YouTube, I seem to get a lot of emails. I've said this before. I was kind of shocked. I get a lot of emails from people asking questions that don't want to post them in the comments. I guess because they're nervous about being made fun of or something. I'm not really sure, but I get a lot of emails with questions as well. And I'm more than happy to respond to those either via email or, I address it. I'll address a question during one of these live streams or recordings. Swing by Gym of All Trades on Sunday night live, and I'll give you a shout out. Try to get some more follows. Not that Jim has. I think he means has a YouTube channel. Yeah, sure. I'll go and check him out here, especially because it's a very different type of analysis than what I do. I know the guys at I think Cheeky Crypto do a lot of Elliott wave or wave analysis on, especially on lower term time frames, but also higher term time frames. But the little guys. I tend to find that the little guys do a much better job, or the smaller channels, of explaining things to newer people. Mainly because when you're a smaller channel, you kind of got to do something to differentiate yourself, right? Whereas the bigger channels usually far more, it's like Crown. Like you go to Crown, and for people that are new there, they're looking at his stuff like I have no idea what the hell he is talking about. So they got to hang out in the community and really dig into what kind of analysis he's actually doing, because he's always using some kind of crazy indicator that Caretaker or KVDB or Mournfall built. Gym of All Trades. I'm actually already subscribed to Gym of All Trades. Huh. Okay. So I am subscribed to this channel already. And I'll try to see if I can hang out during one of the live streams. So appreciate you stopping by. And yeah, I'm already subscribed. Cool. I must have gotten recommended by somebody here prior, maybe. Yeah. Okay, so, okay, yeah, it is you. I've got a few more messages coming from different places. Litecoin. Somebody wants me to look at Litecoin. Mr. No Name. Hello. Yes, sir. You know all about what's happening with Litecoin, sir. You're just okay. For those that don't know, uh, Mr. No Name is my mentor. Yeah, Litecoin came down to the 888. It's on the daily basis band. Looks good so far. Nice little uptrend. If it falls below 8302, though, beware. This is going to be a much longer consolidation and or a run back to around the mid to low $70 region. Maybe even lower, but I doubt it. The daily Stoke is pointed down. $98 to turn that back up. Right now, consolidating around the basis, I don't see any problems. Really high volatile move that broke out above the highs and just sold right back in, but it ran from one side to the other. Reversal off the 618, ran up, held the basis, and then just a monumental push through that 105 resistance overhead. Reversal off the upper second and third after pinning out volatility, come back to the basis. I would say this is good even down to the lower first. You don't want to see it break below the lower first and the 768 or 786 rather, at around $87, $87.50, as that would most likely violate this low. And unless it gets a closing lower low on bullish divergence, I'm going to say you don't want to see it head all the way back to the lower second. That would give me a pretty bad look on this high up here. One last thing that I will look at. By the way, yeah. So, Mr. No Name isn't even in the chats here, but he acts like he doesn't know what he's talking about, which is fairly amusing. All right, so a little bit of volume analysis here. Just simple volume analysis. That was a pretty strong high that was put in. So I would have liked to have seen continuation after that kind of a volume candle, but it did wipe out most of the bottom feeders here off of this last lower high. So when I say bottom feeders, they were trying to shoot for the bottom. They were shorting the lower high, looking for the breakdown from that 79, $80, and then got their buttholes blown through their face holes in the next two candles. So, yeah, I would have wanted to see continuation, but that is, that's such high volume that, when you start to see a reclaim of that close, then it was mean reversion. We'll come back to it later. Back above 105, and I'd watch that upper second standard deviation, which is currently at 113, and I do think 130 to 140 is in the cards if this does get back above the upper second again and start closing. That would be the 191 and 1272. And I think the halving's pretty soon anyway. So I'd be looking for this to run pretty hard. If Bitcoin heads up, Litecoin likes to take its little pauses when Bitcoin heads up. I don't know if that's necessarily what's going to happen, but Bitcoin heads down, you're going to see this thing probably sit around sideways. It's kind of been just hanging out when Bitcoin has bigger moves to the upside and downside. It's doing its own thing. From the monthly perspective, yeah, 73. You don't want to see any closures back near that 618 again. That would be bad, especially any closures below that 618 of the move. Yeah, this chart's a mess. But yeah, that's pretty much it. Don't want to see closures back below that 618. Otherwise, it's good. The monthly is higher low structure as well being built. Throw on like a Gann swing indicator, and you can see that it's a good base that it would build around that 618. Nice big order block candle on the monthly, wick right into it, back test it, and then been wicking into that liquidity area on this monthly order block around that 618, kind of bracketing the underside of the 618 to that 702 there. So looks, I would venture to say this is a little less technical analysis and a little bit more opinion, but I'd venture to say that this is more than likely going to have a pretty darn big run up if the underside here is taken out on a closing basis and it's just pinning out on it at 109.50. So we've got that close that came in at 108.60 and the open here is 109.50, the close open of this low. Above there, then you've got 123 to 125. It's basically right around that wick high area. You have the 191 and 1272, and then it's pretty much a run to 140, 150 area at this low. So I would venture to say that if structure maintains above that 618 of this last pull that I did, and you can even update the pull if you want and say $77, which is a daily level that I just called out a few minutes ago. That, yeah, look at that 702. You don't want to see it violate this little inverted head and shoulders down here around 77 to $71. Yeah, and it's all lining up in the same area. So hope that helps, sir. He says, "Good job, but you missed a bunch. You missed a bunch of stuff. I'll talk to you about it later." You dick. All right, that's enough goofing around for right now. A little bit of Litecoin, a little bit of ordinals. Anybody got anything else for me? And then I'm gonna go. I will take one more. Yeah, no, I see you. Thanks, bud. Appreciate it. Ha. Okay. Let's see. I think you're messing with me, but I will look at it. Yeah. I'll look at it. So you want me to... It's not listed. Yeah, they delisted. Oh, okay. Do you really want me to look at Filecoin? Or are you just kidding? Okay. Let's take a look at Filecoin. Here's Filecoin on the one-day chart for KuCoin, because I couldn't be bothered to pick out a different chart for Filecoin. It looks like, well, it does not look good, especially when you zoom out. Filecoin looks like garbage. And I mean, the best you can hope for is double bottom and then this thing moons back to your entry, but I highly doubt it. Sorry. Beard was hitting the pop filter. My bad. Yeah, the daily looks like it can't even make it back to the accumulation at 435. So it swung the area, it lower high, it's way in there, and momentum is pointed down, close over close. If anything, and if you want to draw like meme patterns all over the place, you could, but yeah, it's got to hold 392 to $4 to the downside. If it starts getting below there, it's got to reverse off the lower second at 366 to 370. Otherwise it's going to be violating this last wick low. And it was high volume on that move up. That to me, putting in a high there, that's either a washout or an exit. Was not even that high volume on the last wick low. Yeah, man. This is KuCoin though, so I guess maybe I shouldn't be doing volume analysis on KuCoin. But it doesn't look great. Filecoin doesn't look great. The best that you can hope for if you're looking for upside is that this is a double bottom that confirms above this breakdown candle here, and the open was 465. So it's got to get above the basis at about 496 as well to avoid running the wick high on the candle prior to the breakdown on the weekly. So I would say, $5, things get a little bit more interesting to test into the deeper $5, $6 area. But yeah, back below, I'd say back below $4, this thing's probably going to run its lows again. And the best that anyone that's trading this can hope for on the upside moves is that this turns into some sort of a macro double bottom. I just don't know if there's really any interest in Filecoin anyway. I know it's been attached to a bunch of projects, but it's like ICP. It's just kind of gone nowhere but down. Link. I got a link, and that one came from YouTube. Which exchange do you want me to look at Stinky Linky on? I have, I think this is Femex, Bitstamp, Binance. We can look at Binance. Let's just go to Binance. And link is, man, this deviation from the lows might have been a really good entry if link can pick itself up off the floor, man. Man, but it didn't even come in on volume. This is not the greatest look for link. I mean, good thing they're just integrated into everything, because otherwise, I don't know. Otherwise, I'd be in tears if I was holding on to this thing still. I know people that are still holding on to it, although, they're still good. They're just, when you zoom out, it's actually not that bad. It's a long form consolidation, deviation to the downside on the weekly. As long as it's above, 563 or so, this last low over here looks okay. Let's go ahead and mark that. It's 562. So as long as it's above 562, looks pretty good. Weekly rejection off the basis band. It did reverse off the lower second and third after that breakdown. And, it's kind of right in the area that it needs to break out from. So it's around the basis band. There is a weekly order block in here. So I would take this high area that comes in at the basis band at 663 as kind of its breakout area. If it can get above there, that also puts it in and around this low. That would be a reclaim of that low, and then it can test the upper half of the Bollinger Bands around the $7 to $8 range, where the upper first and second are coming in. The weekly is turned up on momentum. This is normal coming from the bottom side, reverting back to the basis. You're going to see volatility cool down. The only time you're going to see expansion is away from the basis in the downside direction towards the lower first, or the upside direction towards the upper first, and then the aggressive expansion starts. It's like your breakout continuation or reversal areas at that, at the second standard deviation. So really low volatility on the weekly. I suspect this is going to last. But there might be some good trades in there on the dailies. I mean, this was a good, swing short position from the upper second and third area. So far, I mean, if you were taking a swing long on that deviation, on that being a deviation of the lows, turned out to be a good call. The daily, however, needs a little bit of accumulation or consolidation. 625 on the momentum pivot. Again, this is a great indicator by KVDB. You can go over to app.crowntrading.net and grab it if you want. I don't think they actually sell it individually anymore. Again, I don't have any affiliate. I'm not an affiliate. I'm just like their stuff. I just like the indicator, man. Yeah, you want to see this hold to the lower first. So moves down to lower first are still good. That doesn't violate this low over here. So that's 593 currently. So basically anywhere above $6, it looks okay. Now, of course, you don't really want to see breakdowns from this last low, but it could swing that last low down here at the lower first or lower second and get bullish divergence as long as it's staying above that 562. So if you did see moves down to the lower first and second areas, I would be aware of the lower term timeframes, and you can hunt reversals from there. Again, you have to be careful because that would be counter trading the daily trend, especially if it puts in a low, a consolidation, and then a low here, as it would most likely move that way, and that would be counter trend if you were taking a long. Might be worth it on a scalp though, and then see what happens. Really, anything that stays above 581 at this closing low structure looks good. And, you know, back above the wick high, this thing's going to go back and test 643, 650 at the upper first, and that wick high is coming in at 630. So that wouldn't be too much of a move then from there to go test the upper second around this closing high structure at this low side structure on the weekly. And that's around your 662 region. Daily resistance above there. So it's already above this low, so that's good. I mean, realistically, it's just where these highs were put in now. It needs to regain. It's trading right around this high right here, which is this low side structure. So it needs to regain this low side structure right here. Go test the highs, and then I'd be looking up to like the $6.50, $7 region. So that would be your upper first to upper third almost. And then back below the lower first, if it starts to hit that lower second and break down from the weekly at 562, that would be bad. Then you're likely running this low again around the $5 region and under. What did this get to? 477. So yeah, likely looking at that area getting ran again somewhere around here. I mean, you know, the mid to low $5 region. If we do start seeing that close below the lower second at 568. So hope that helps. $3 was a good buy. Yes, $3 was a good buy. If you're buying spot, because otherwise $3 was a long ass time ago. But yes, if you're a long-term spot holder and you packed your bags like last bear market, or on the big rundown, the original rundown here, even on the original, even in this is a giant accumulation area with a deviation in it as it stands right now in the weekly. So looks good that it re-entered this area that is, you know, more bullish than bearish, but you just don't want to find it as consistent resistance. The weekly is showing potential further upside. The daily is, you know, in a tentative uptrend within the context of a larger downtrending structure. So my advice would be, if you're trading, keep an eye on the lower term time frames. It's probably trading pretty darn technically. And you know, it's trend momentum, man. Trend momentum, and that momentum is packed in your support and resistance and volatility. So just pay close attention to it, and probably got some. I mean, this was a decent set of trades up. Now it's just a matter of after this couple of days of consolidation, seeing which way it wants to go. That's going to do it for me, guys. I've got a few more requests, but I'll have to get to those another time. And I know the person who keeps requesting those over and over again. I will talk to you individually, sir. I do appreciate you. Thank you. But I need to talk to you anyway, so I will get to your requests for those when I talk to you. Thanks for hanging out, guys. I do appreciate it. Please subscribe to the channel, share the content with other people as if you man, I can't talk now. Go ahead and share the content with other people if you do find this helpful, useful, and educational. And I will be back with a Bitcoin in 60 seconds later today. Hopefully my voice will hold up. That's been... Oh, Cheryl, you popped in right at the last second, right as I'm doing my wrap up. Yeah, just DVR it back. I go through a lot of stuff. But hopefully you find it helpful. And for those of you that are just here on YouTube, follow me on Twitter, because I do lower term time frame analysis underneath the Bitcoin in 60 seconds daily videos. I do them on YouTube, and then I post them on Twitter, and underneath there I do some lower term time frame analysis. So if you are here on YouTube, go check me out on Twitter. It is what's my username? Hold on. I have to get my own username. Just a moment here. CryptoLandy. So follow me on there. Follow me on Twitter. So yeah, CryptoLandy. And I usually post a link to the thread for the day in the Bitcoin in 60 seconds videos, but you'll get some lower term time frame analysis in there as well. Whether it's embedded video or a link back to an unlisted YouTube video. The reason why they're unlisted, again, is because of the way the algorithm works. With growing channels, I can't have videos stepping on other videos. So you guys take care of yourselves. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe and of course, as always, stay safe. That's a big one lately. Please trade safe, stay safe, especially. And I will talk to you guys later in the Bitcoin in 60 seconds videos and in DMs and chats and all that good stuff. Take care of yourselves. Landy out.